Friday's disappointing jobs report gave the bears more ammunition to make their case. Once again, job creation was less than expected and more people are leaving the labor force. So we decided to bring in another bull-bear face-off this morning. On the bear side is BNP Paribas North American Chief Economist Julia Coronado, and taking the bull side is Bank of Tokyo-Mitsubishi Chief Financial Economist Rupkey. And I have to say, Julia, your case is looking a bit stronger this morning. I want to dive into those U.S. jobs numbers, but when you talk about the U.S. economy, we have to talk about global demand. And on a day like today, where Europe is front and center, major political uncertainty feeding into the markets right now, that's got to be an issue for the U.S.
It's definitely an issue, and that's one area where we're actually worse off than we were last year when the economy softened. The global economy is looking a lot shakier, both China in a slow patch and then the uncertainties out of Europe in a recession. This means less support for the domestic economy. And that was one of the things that got us out of the recession.
Not only Europe in a recession, Rupkey, but Michael McKee just said Citigroup's putting 75% odds that Greece will have to leave the euro. What does that do to the U.S.?
Well, that would be a separate situation. Why don't we just take it one step at a time to start with France? I mean, the yields on 10-year debt in Spain and Italy haven't gone up much at all. They're only up 3 or 4 basis points. I think this is like a one-day reaction. New York isn't even open yet. It's very early here. I think things will calm down later on in the week.
And you're also positive because gas prices have come down significantly. In fact, we're seeing oil prices sell off this morning as well. That's giving you some hope here.
Yeah, maybe they're coming down for the wrong reason. They think the jobs report was pretty weak. Crude oil went down under $100. But yeah, it is very supportive. Gas prices, not in my town, but they've come down about 13 cents from the highs, $3.93 to $3.80 a gallon. And over the last month, that's, consumers have the tailwinds of energy at their backs now, if you will, instead of facing headwinds.
Unfortunately, what they don't have is wage growth, and that was one of the disappointing parts of the jobs report, was that wage growth is just very subdued. There's not a lot of downward pressure, but it just sort of hovers around 2%, a little below, and that means that purchasing power is very hard to come by.
In other words, those who have jobs aren't making enough money.
That's right. That's right. So it is good that gas prices are falling. That does help that purchasing power backdrop, but overall it's sort of steady as she goes. There's not a lot to look at and say, we're breaking into a new phase of stronger recovery. It's more kind of a lot of muddle along here.
What are you going to say, Chris? The revisions tell the story?
I don't like the muddle along characterization of the economy. I mean, last year we had everything thrown at the economy but the kitchen sink, $4 gasoline, Japan earthquake, et cetera. Stocks were down 20% from the highs of the year. They're not down that much now over the events out of Europe over the weekend. We had everything thrown at us, yet we still created 175,000 private jobs per month on average.
But we have record stimulus coming into the economy.
Well, it's how much do you think that's really stimulus? I wouldn't say. I think there's a natural progression coming from the lows of the recession. I wouldn't even call this a recovery. It's coming up on 3 years since the end of the recession. This is an economic expansion. It's going to continue. It's not going to be thrown off the track. I don't see.
I mean, the amount of jobs being created, not to side with Julia, I wouldn't do that to you, Chris, but the number of jobs being created is barely keeping up with population growth.
That's the real story here, is that it isn't a recovery in the typical sense of the word. We are in a better place in the labor market. It's much more stable than we had feared last year. But all we're doing is absorbing population, and that means that the run rate of the U.S. economy is a lot lower than before. And this is really a tricky issue for the Fed. They keep wanting to see us break into that stronger phase, create more jobs than just the population growth, and move that employment population ratio higher, which would mean more purchasing power, faster growth. And we're just kind of stuck. We're in this cruising speed that we can't seem to break out of.
If you go back over the last couple of recessions, I've been through many of them now, we're making the same trajectory upward in jobs creation that we have coming out of 1991, 2001, and right now. We're on track to completely normalize. I don't see anything that can be done on the part of the administration or the Fed to goose it to make it go any faster. This is fast enough. I think that's what we need to realize.
And you expect it to go, actually, the unemployment rate down to 7.7% by November, by the time President Obama will face.
Right. It's unfortunate that we've trotted out Okun's Law, which I thought, I studied back in the 70s. It's back at us again. I think what you want to think of in terms of right now is that growth doesn't have to be, GDP doesn't have to be 4% to bring down unemployment. Unemployment's going to fall anyway. It's already fallen a percentage point in the last year. That's all to the good.
All right. And Julia says that the unemployment rate will not go to the 7% level by the time of the November
Sooner or later,
elections.
some of these people are going to come back. And we also have troops coming home, and they're going to need jobs as well. And that's going to be happening in the coming months. So I think there's a lot of people that need to be employed.
All right. A healthy debate. We will see what happens. We'll continue this one. Thanks to Julia Coronado, BNP Paribas, and Chris Rupkey, of course, our eternal optimist of Bank of Tokyo-Mitsubishi.